the yellow metal continues to shine bright. Spot gold has hit yet another record high today to trade above $3,200 per ounce. Spot gold is up nearly 8% this week so far. Escalating trade war between the US and China is aiding safe haven demand for gold. US President Donald Trump on Wednesday said that he would temporarily lower hefty duties on dozens of countries including India, but ramped up the tariff on China to 125% from 104% earlier. Dollar index meanwhile continues to fall, making gold less expensive for other currency holders. Gold's rally of more than a fifth this year has also been boosted by central bank buying and hopes for more Federal Reserve monetary easing. And remember, yesterday data showed underlying US inflation cooled broadly in the month of March, with traders now pricing in expectations for 3 interest rate cuts over the remainder of the year, with a chance of a fourth as well. Lower rates typically benefit bullion as it pays no interest, and these are some of the reasons which continue to aid the global market as far as gold is concerned. And remember, gold is up nearly 20% this year so far, and what a rally it has been for the yellow metal. But to discuss this in greater detail, we now have a guest joining us on the show. We have Mr. Anuj Gupta joining us on the show. Mr. Gupta, thank you so much for taking your time out and joining us here on ET Now. And first up, let's talk about gold, because what a rally it has been. But remember, last week, gold is generally considered as a safe haven asset, but when last week globally asset classes were falling, gold also saw a decline. But after that, we have seen a run up yet again. What's your outlook when it comes to gold, at least in the near term?
Good morning. See, if you see last year, gold increased by almost 21.48%. But in this year, since Jan to this year, almost we have passed 4 months. And in only in this 4 month, gold given return of almost 22%. So that is a positive comeback in gold in this year also. This is due to, the, US trade war, tariff and trade war retaliation war kind of thing. This will giving some, safe haven demand. And even we have notice that many small economies, just like Indonesia and other economies, are buying gold for their reserve because they are expecting that currency may depreciate, and after the currency depreciate, that gold will appreciate. So the safe haven demand is also giving support to the gold prices. And even if you check dollar index, which is corrected by almost 7% and now traded at 100 points. So this is, as dollar index is correcting, so that will also giving support to the gold prices. So there are three reasons that gold prices giving, very good return in this year also.
So, and can you quantify this for us? I understand you are saying you're bullish as far as gold is concerned, but if any targets that you can give for the rest of the year?
See, if you see that Bank of America given a target of $3,500 per ounce in next 2 years. So if you calculate this amount in Indian rupees, that would be around somewhere around 99,000, 1 lakh rupees kind of thing. But it is a very, as per the Bank of America. But as per our concerns, we are expecting that gold may test in a very short term around 93,400, 93,500 kind of level. And on international market, it may test, 3240, 3250 kind of level. There's a very short term target. Long term target, we should wait, because silver is not giving as per the return as per equivalent to the gold. So we are expecting that gold and silver may run, actually the together. So we have to wait and watch, because there is this, because these are the only reason where we saw a good support for the red. If we saw any, support kind of thing from the side of tariff war, or even we have also seen that Trump, increase the 90 days kind of cool off days to put the tariff on other nations. So that will be little bit kind of some profit booking we can see in golden prices. So we have to wait and watch for the red. But for small terms kind of thing, we are expecting gold may test 30 to 50, 30 to 60 kind of dollar in kind of levels.
So over the short term, gold in the global market could touch 3,240 to $60 per ounce. But that was exactly my next question with respect to silver, because silver has underperformed gold over the last few days, and that is because industrial demand for silver is expected to be on the lower side. But now, do you expect over the next, say, 1 or 2 months, silver could inch up and could probably outperform gold?
See, there is some issue with the industrial metal. However, we recently saw that China release some stimulus package for the Chinese economy, and due to this, we are expecting that base metal demand from the China may increase. And after that, in 2 days, last 2 days, we saw a sharp recovery in all the other industrial items. But in silver, we didn't saw any major movement because the industrial demand of the silver is not looking so much as compared to the gold, because gold is a totally safe haven demand, but silver is also a safe haven demand as well as the industrial demand. So due to this tariff war, we saw a sharp correction in the demand of the silver. So that's why we have seen that China, silver is not giving so much kind of return due to the Chinese demand. So we are waiting for that silver will move in the tandem of gold. But still, we are waiting for that silver is not giving so much momentum, and we are waiting for a sharp run up in expecting a sharp run up in the silver prices. For short term, we are expecting that silver may test 93,500, 93,600 kind of level, which may be, in a very short term.
So that's as far as silver is concerned. But since you spoke about China's stimulus, Chinese government is working aggressively on stimulating their economy. It has been doing it for the last several months, but now that tariff war with US has intensified, how do you expect the Chinese economy to evolve over the next 2 to 3 months, and what kind of impact will it have on industrial metals, say zinc, lead, copper, aluminium? Demand is likely to be impacted if real estate demand in China doesn't pick up, right? So what's your estimate when it comes to the Chinese economy and its impact on industrial metals?
We are not expecting so much kind of recovery in Chinese economy, because there is a retaliation war, and due to stimulus package, probably US may put some more tariff on China. So we are expecting there is some slowdown kind of level, slowdown kind of situation in China and US, and possibly due to this we can see some slowdown in a global economy. So if the slowdown may be seen in global economy, so probably we can see some correction in base metal also. But still, as China is announcing some stimulus package, so for short term perspective, we can see some sharp run up in the copper prices. However, we can see some correction in zinc prices. So as far as concerned about the base metal, we are not sort optimistic for the sharp run up. We are expecting some range bound kind of movement, because on lower levels, China may give some stimulus package, but on higher side, the tariff plan maybe put some pressure on the base metal. So we are not expecting so much run up in base metal. We are expecting some range bound kind of level. If China is able to recover in a full way, then we will see a sharp run up in the base metal prices.
Okay, so that's your view as far as base metals is concerned. But Mr. Gupta also wanted your thoughts on crude oil, because there's a lot of volatility in the oil market as well. After falling to $60 per ton per barrel over the last few days, it has rebounded yet again. What's your outlook with respect to supplies going forward? OPEC Plus, of course, has increased supply higher than expected. Demand is expected to be on the lower side. But over the short term, where could crude oil prices be headed?
See, currently it is trading around 56, $57 kind of level, and we are expecting it may test 55 to $52 per barrels, because supplies is huge, demand is low, and due to this slowdown, we are expecting a lower demand across the globe, and that will impact on the prices. However, we have also seen that OPEC plus allied member increase the supplies of the crude oil, so that will also impact on the crude oil prices. So we are not very optimistic for the crude oil side. We are expecting some sell on rise kind of strategy in the crude oil prices, and we are expecting crude may test 55 to $52 per barrel in a very short term.
$55 per barrel could be tested for Brent crude over the next over the short term. That's the view coming in. Mr. Gupta, thanks so much for taking your time out and joining us here on ET Now and helping us decode what the implication could be and where commodity prices are headed over the short term. Let's shift focus to our next segment, Did You Know? And today in this segment, we will put the spotlight on the world's largest copper mine. Escondida is the world's largest copper mine in Chile's Atacama Desert, and it alone accounts for nearly 5% of the total copper global production. Mine is operated by BHP with a share of about 57.5%. And in 2023, this mine produced over 1 million tons of copper. This is a big economic driver for the region because the mine provides billions of taxes, royalties, and jobs for the country. That's all the time we have on this edition of Commodity Central, but don't go anywhere. Newsroom coming up on the other side.